Hello, everyone. Thanks for joining us again today. And I've got three special guests with me. Dale Elenteni from Gustin Cho Associates, Alex Carlucci, and also Gustin Cho from Gustin Cho Associates. Thank you, gentlemen, for joining. And we're going to talk today about when you're having a new home built by a builder and you're negotiating with the builder on the cost of the build and the purchase price of the home, and then they attempt to steer you to their lender and put sometimes a little undue pressure on you to go with their lender. We want to bring that as a topic because sometimes home buyers uh, are struggling to know which direction to go. Do I work with the lender I've been speaking to, or am I going to go with the builder's lender? And so that's the topic today. And if you've been struggling with this question for yourselves, or you have experience in that, and from a recent home purchase you've made, please chime in down below in the comments. So I'd like to open it
Yeah,
up to
Eric.
either.
Yeah,
Go ahead,
yeah.
Gus.
Thank you, Eric. I just want to make a note that if it's okay with everybody here, I'd like to have this two-part series today. We'll talk, but on the second part, I'd like to invite some, whether it's an ex-builder or a builder or a realtor that's a preferred lender, so they have the insight. You know what I mean? So. Uh, like Rhonda, for example, one of our loan officer, duly licensed realtor loan officer, she has extensive experience with working as a preferred lender for a builder, and she knows builders. So well, I just want us to get like both sides here. For
Okay, yeah, we could do that in a follow-up video. Sure. So Alex or Dale, do you have anything to any
Sure.
prior experiences to bring into the conversation?
Yeah, let me start. I'll let Dale talk about what he mentioned earlier, but I'm going to bring up something that I noticed. A friend of mine's wife is a builder, and they're having trouble closing and selling their properties, and they have about 160 units, and they decided to start renting them. And they're having trouble renting them too at the high rent that they need because their builder's lender isn't aggressive. And right now in this environment, there's not a lot of 800 credit scores with 20% down who have $300,000 a year jobs that qualify. It's a tough environment. The types of clients out there are kind of wishy-washy, and they're complicated files. And these builders lenders are not savvy when it comes to those types of files, and they're probably not closing the loans that they need to. And even though there's a demand, the demand is different. It's a tougher clientele, and that's what we specialize in. So when these clients use the preferred lender because they're getting all these bells and whistles, they might not close the loan, and the builder suffers too. So that's all I wanted to say. And I want Dale to talk about the topic before, because that's a greater issue. Go ahead, Dale.
There's two things just to kind of piggyback off what you said, Alex. One, we get a lot of clients who may have started with the builder or were directed to the builder's lender, but because they didn't fit the proverbial box that you're supposed to fit in with them, the vanilla one, they come to us and we end up getting them done. I mean, we do a lot of manual underwrites, VA, FHA, whatever. We have had many scenarios like that with the builder. But builders going to incentivize clients with lower rates if you go through them to sell the property, but they're also going to inflate the property price. The big thing is right now, it's a very competitive environment due to the limited inventory. People are still scooping up active and available homes. And if you're in a position that you think you're ready to buy, is 7% versus 5.5%. If it's making that much of a difference, are you really ready to buy? Is what you got to ask yourself. But if you do get in at the 7 or whatever today's market rate is, when the rates do drop, you're going to gain equity in that house more than likely because the market's going to instantly become more competitive, and you appreciate and you could refi during that time. So that's kind of what I wanted to say.
Right. So
Alex?
this is what's going on. So let's say a house was going for 400,000 new construction 6 months ago, and around the neighborhood, prices are falling on existing homes. Well, these builders are building houses based on 400, worried that houses are worth 360. So instead of hurting their own inventory and selling it to for 360 and giving you a normalized loan, they're selling it for Ford and having you buy down the rate and give you some and kind of convince you into this higher price so it doesn't crush their inventory. And because if they start selling for 350, then all their houses have to go for 350. So they're keeping these prices inflated and giving and tricking you into paying the higher price like you're going to get a deal. And excuse me. And that buy down of that rate of $20,000 that's getting you a 5.5 when the going rate's 7.25 sounds really great right now. But what's really going on is you're paying $20,000 for that. And in 6 months to a year, you might get a 5.5 refinance like Dale was talking about for free. And you should have bought it for 380, or you should have bought it for 375 and saved yourself the money and gotten that 5.5 rate eventually, which we all know is coming. They're announcing it all over TV that the rates are going to drop. So those buy down of rates is really paying for it. That's not free. There's nothing free in this world. The builders manipulating the price, and they should be put in jail for not giving seller credits to other mortgage brokers outside of their preferred lender. And it's criminal what they're doing. They're steering you. Anybody that's steering you in corner to do something is ripping you off. Remember that. So that's all I wanted to say.
Yeah. So that was something I was going to mention, like Alex just touched on, which is, they're grossing up the price of the house to be able to get you that great rate. So you're going to be paying for that rate for the next 30 years and whatever the difference is in the price. And the other thing that you'll see is sometimes they say, hey, if you use our lender, we'll give you, a bonus room or, all these add-ons to the house. And it's like, hey, there's not that kind of money in the mortgage. So, what's going on here? And in some instances, the builder is big enough where they actually either have ownership in a lending company. It's their sister company, right? Or they've got a good deal with the lender where they're getting money on the back end, which is a whole other discussion. There's a whole other video, right? So there, if it sounds too good to be true, it probably is, but you're always going to be paying for it. It's okay to pay for the lower rate, but you have to know that that's what you're doing. So, like those of us here, if you're going to be buying down your rate, you're going to be told, and it's going to be disclosed that you're paying points to buy the rate down, not that you're paying a higher price for the house. You don't know it and you're buying your rate down. That's all.
Right.
Now, Alex, hey, you said something very interesting. Are you seeing or reading that there's inventory surpluses with builders to the point where they got to rent properties out?
So in some areas, in some cases, not always, but in some cases, there are builders that are giving these deals because they're looking around. They wouldn't be giving you these deals if they didn't feel like there was an urgency to do so. They would be getting top dollar they wouldn't be giving all these credits if it was if they could. They're building. They geared up to build, and some places are probably seeing, hey, we've got 800 homes coming and due. The demand isn't coming through like it was anymore. Let's keep these prices elevated where they're at and slow down the delivery of these houses and keep the prices elevated. We don't want to start crashing our own inventory. That's going on out there for sure. But there's some areas you build it, they'll buy it. I mean, there's still demand. It's hot and cold all over this United States. There's no one market that's the same. I mean, San Diego was looks like it was correcting last year, down 5%. Oh my gosh, here comes California. And now San Diego is the hottest area in the nation right now. It's up 15%. So it's crazy. San Francisco's down. It's just all over the place. You can't say California even anymore. It's San Francisco's bad, San Diego's great. North Carolina's great. Florida is wishy-washy. Probably the scariest because of the insurance cost, but there's all sorts of places. Like Illinois is real stable. It didn't go up gigantically, like the Chicago area. There's no homes. If there's a builder in the near suburbs. So my friend's way out this 50 miles west of Chicago, 60 miles west. There's not high demand out there. It's the boondocks on the other side. It's at the end of civilization before it becomes farmlands. So that's where they're building out. And those people, they're kind of stuck. The type of people out there aren't making 150 grand a year. They're making 70 grand a year. And these houses at 3% selling for 350 was no problem. But now at 7%, it's a problem. So it's an economic thing. You just got to know your areas and what's going on. If they're building a new IBM plant somewhere, then it's going to be a new construction there's going to be great because people are going to move from all over the country, get a job, and they're going to buy there. So it's very spotty where it's hot and cold. Now, do I know exactly what's going on? No way. But I watch a lot of stuff. I read a lot of stuff, and I see that it's a bipolar economy and it's a bipolar housing market.
Yeah. The other thing
Okay,
I'll say is, go ahead, Gus.
Okay, but I ran into a situation like this just yesterday. Actually on the forum, a client of mine, Peter, and actually I'm going to talk to him to see if he can come in on the next, a sequel to this topic. Builders steering their home buyers to their preferred lenders. Now, I told him this. He said, "How in the hell can D.R. Horton offer to pay 5.3% interest on a 30-year fixed rate loan plus 17,000 either in upgrades or closing cost credits, all right, when the going rate right now is 7%, and I have to get seller's concession, right? There's no such thing as free in the real estate or mortgage markets. Hands down, no. Okay. So the bottom line is, I go, Peter, I'll tell you what, okay, if that's like, you do your due diligence, compare apples to apples, find out what a comparable home goes out there. Anybody can estimate what a new construction home goes for, plus lot construction. Now, these days with all these calculators or pricing engines, all right. And this was, the day before he posed this questions on the forum. And then I answered him yesterday. He went to see the home, did his own research. He goes, "Gus, you know what? You're freaking right. That they are inflating the living crap out of these houses. Now, I have nothing against builders. Okay, I will give them business. All right, all day long, but they're not. They're not playing fairly. They are gouging people in an indirect way where they can get along with it. Now, how can they offer a 5.3% rate? Sometimes lower. Is you got to buy the rate down. It might cost 10, 20, 30 grand or whatever.
Gus, let me point out to you. Let's just say it costs 15 grand to buy that rate down, which sounds about right for 350,000, and it's 17 grand in closing cost credits. You go to try to tell them, no, I don't want the rate buy down, and I don't want the closing cost credits. Just give it to me for $35,000 less, and they'll say no to you because they don't want to mark their own inventory. They are steering you in.
Now they got caught up with their own bullshit. Okay, so Alex, I know what they're doing. Okay, so that's why I don't want our viewers, for example, the public, to believe us. Okay,
Yep.
You do your own research, hear me out, and hear out the public customer, and make up your mind. Okay,
They're paying lobbyists in Congress to get away with this because it's such strict rules. If we did this as loan officer, we'd be in jail right now. We lose our licenses. This is steering in 10 different ways. It's price manipulation. It's steering the customer to who to use for a loan officer. It's so many levels. It's wrong. And they're paying Congress people to shut up. That's what's happening.
Hey, Alex, let's stick with the facts here. Okay, the fact is this, all right? Somebody's paying for this rate. Okay, they are deceiving the customer. Now say they're a preferred lender, but the builder doesn't own the company, no affiliation. You know how they get how kickbacks occurs, like the steering, is you can't have kickbacks due to RESPA in the residential mortgage market. Otherwise, it's mortgage fraud. You know what they do is the builder may rent a desk to the lender for 30 grand for a little desk, a desk charge. So they're using, some loophole, trying to get a kickback if they can't profit from the lender directly, or they can't inflate the price.
The builder's wife owns the mortgage company. That's what's going on.
Right. So the bottom line is this, okay? You got, if it's something if it sounds too good to be true, it normally is. No such thing as free anything free in the mortgage market. I guarantee you.
Let
So,
me tell you, let me
you know,
tell you,
not
let me give you an example of what happened to me today, just to see how nonsense this is. They called me after I pre-approved them. The wife had a 550 credit score. They didn't want to sell their house in Texas. They're buying a new house in Tennessee, new construction, because their daughter's going to school. She has epileptic seizures. They want to be nearby her. So they don't want to sell their house in Texas and be in the middle and not for sure they're going to close on the other house. They want to have both houses temporarily. And when they finally move to Tennessee, they'll sell their house in Texas. I got them approved. I also told them I could prove them if they did sell the house with just the borrower that's got a 770 credit score. They said, no, we don't want to do that. So then the builder gets a hold of them because they were forced to have their credit run before they would accept the offer, just to make sure that they qualified. But it turned into a sale job. And then they offered 1% of their closing cost credit, which was like $3,500. And I mean, I could, and their rate was worse. And I could have done the same thing, right? I could have done that, match their offer, but I didn't get the chance. They just went with the other person because the other person convinced them to sell their house in Texas to Red Ribbon or Blue Ribbon or these Zillow or these corporations for $20,000 less, just to hit a bid to ensure they can ensure the closing date, and it's a cash offer, and so they can follow this builder's advice to get rid of that house. You get a better rate, and all this nonsense that they were convinced to do because they're in front of this builder. I'm in Chicago, they're in Tennessee, talking to the person and getting convinced by this loop-de-loop scam. They're losing money on their house. They're selling it not on the open market, but to a wholesale buyer that's going to pay way less for their house just so they can get the better rate that they're not going to get a better rate. There was no chance for me to save myself. They were getting hit.
They were getting hit twice.
10 different ways. It's just such a scam. Everything's a scam. And
they were getting hit twice.
They bought into it. The rate, they thought that the 1% seller credits. It wasn't the rate, it was the seller credits. They're getting $30.
Let me say something here. You know, this conversation right now is about the builder and the lender and that whole thing is very similar to when you go and buy a car and the sales guy's over here and he's still connected to the finance guy in the office.
Yep.
You know? It's interconnected. And when you go into the car dealer, you have to separate the conversations. You can't let them link them together. And the same thing has to happen here with the home purchase. You could come to, anyone here on the screen and get your pre-approval letter without any terms on there if possible. And then you show the builder, I'm already approved for this to purchase this house. Now I want to discuss the price of the house. Now you want to get that price of that house lower, and they want to know, well, talk to our lender. What kind of deals the other guy offering you? Don't worry about what the other guy's offering me. I'm first negotiating the price of the house first. Just like you go to a car dealer, you want to negotiate the price of the car first. It's not like, what payment do you like? No, I want to negotiate the price of the house down. I want to get the best deal in the house possible. Financing, you figure it out later. You already have it in your back pocket. You already have the pre-approval in your back pocket. And then you go from there. Do not let them tie it together. And if they try and tie it together, there's a million houses out there.
If you got
all this stuff is not if it's going to come out, but when. You're going to have a whistleblower.
They're paying the people off at Congress. It's already out there. This is not a secret. It's been this way for many, many years.
Alex, I'm going to tell you something. Let's forget the low interest rate, all the incentives or whatever. Okay, say the builder offers the same rate. The rates are back at 3.5. Okay, we offer 3.5. The preferred lender offers 3.5. All right. So, but the builder. What is the reason that the home is priced modestly? Why would the builder, offer like say a $5,000 incentive or $10,000 incentive by going with a preferred lender? You know what I mean? Because the builder gets paid off. You know how? Kind of like borderline illegal by charging a desk fee, say
Yeah, I
one
know.
little desk for like 30 grand.
Yeah.
You know what I mean? And
Sure.
things under the table. They try to manipulate this. Now, the CFPB and the regulators can nail them in a freaking heartbeat, but they don't have enough freaking agents or to audit them and
They don't want
prosecute
to,
them or
Gus. They don't want to.
yeah,
Alex
so-
already explained, they don't want to.
They had a meeting in Congress. They brought the builders in front of Congress on a panel. They drilled them and then they let them go and they never heard about it again. It's just, that's the way
You know-
It was theater,
it was, yeah.
right? It was
theater.
theater. They never
Yeah,
really
the
intended on
government-
doing
yeah.
anything.
The
Dog and pony
government,
show.
the government, local government, especially county government, love builders. You know why? They're developing. That means more taxes for them, so they'll stick with them. Okay, it's not like selling an existing house. They're developing new revenues for them.
Yeah,
I mean, there's no question that Congress likes big business. They're going to take care of the JP Morgan Chases. They're going to make laws that make it better for them versus the small bank. And they're going to make it better for the builders no matter what, because they've got donations. They're going to the parties. They got the guys in the tuxedos going for the donations once a year for the elections and donating.
I'll tell you what. Okay, say everything. The builder, for example, if it's 3.5, and they get denied by the preferred lender, they will. The incentive will go away, even though they go with a different lender. You know why? Because they don't get that kickback from the lender.
So this is what I'm gonna suggest to get back at the builders for the consumer. It's not gonna necessarily help me. Find out all the stuff they want to give you. Put a dollar, try to figure out the dollar figure. So how many points does it cost to buy the rate to 5.375? Oh, 3 points on 300,000. That's $9,000. Okay. And you're going to give me $17,000 in closing cost credits. That's 26,000. How about I just buy the house, no credits, no buy down the rate for $26,000 less, and then
Right.
start taking their houses down and get it cheaper. That's what I would do.
Do the math on
Yeah,
that.
but
Find out the
No,
value
but-
of those things they're offering you and just ask for it. I don't want any of that, and knock it off the price. And you're going to
There-
I could
There's
that
not-
I could tell you
There's
I
not
could
a,
tell you the
there's not
value
a
of
builder. There's not a builder out in the country that will do that, because then they're admitting they're committing fraud. You know what I mean?
No. Well, no, they're not committing fraud. They're going to, the borrower's going to call them and see if they're really, just knock the
No,
26,000 off the price.
they're gonna say no. They're not gonna drop the price, Alex. Guarantee. They're
Well, yeah,
telling
but-
on themselves if they do that.
Well, it's like I'm trying to give buyers the car dealer secret when you go in to buy a car. I wish I knew how the car dealers work when I buy a car. I feel like I'm there for 6 hours being railroaded and exhausted and just tired by the time I sign the paperwork. I just want to get the hell out of there. It's a tactic. I'm just telling people that they're offering you stuff and it's not for free. You're paying for it. That's it.
Yeah.
Figure that out.
Yeah.
Just know that. When a car dealer says I'll knock $5,000 off it, and he winks over to the finance guy, charge him 8% instead of 2% when they go over there, and we'll make it up that way. It's all, if they knock money, they get the money no matter what. They get the money.
You know what? This will be great, because I'm gonna have like part 2, part 3 on this thing. Because the bottom line is you're gonna hear from the actual buyer or potential buyer, shopper, where they did the research. You're gonna hear it from a builder's representative, a preferred lender, a realtor. Okay, so there's always 2 sides or 3 sides of the story. Okay, don't just listen to us. We will just present you the facts, and it's up to you. Be a smart shopper. This is not just going grocery shopping and buying, paying a few bucks extra for the convenience. This is the biggest investment most people will ever make in their lifetime. A house.
Yeah.
All right.
Yeah, and I definitely recommend people to do that math on, if the purchase price is 376 and you take 26 off it, like Alex says, see what the payment is at 7% or 7.25 on 350 versus 5.5 at 376. And if the rates drop in the next year, like maybe they could, then that money was all for nothing if everybody else is refining down into the same space.
Right.
they don't call me Nostradamus for nothing. Now, it's not if the rates are going to drop, it's when, all right? So regardless whether you get a 5.5 or a 5.75 or 7%, you're gonna have to refi anyway.
Everybody's
Why, in fact,
everybody's
why
gonna
buy
have
a house?
everybody's gonna have 5.5. So why pay 15 grand for that right now? It's
Right.
a
Well,
decision.
yeah, exactly.
It's a
You're
very
paying for an inflated value of the house.
let,
Now,
let
a
me,
lot of
let me
people,
explain. Let me
what
explain.
they
Let me
say-
explain to people. Let me explain to customers. I'm using rough numbers here. If you buy a $300,000 house and you buy what they're doing is they're buying the rate down. They're using the profit from the house to buy your rate down. They're not buying it with actually dollars out of their pocket. And they're buying the rate down. Let's say it costs 3 points. That's 9 grand. Now, let's say you were a consumer and you paid 9 grand. Let's say that rate from 7 to 3, 5.5. This is where I'm making it up. Maybe it's $150 a month. Let's say in 1 year, rates drop to 5.5, which is highly possible. I mean, very likely. There's talking about 6 cuts in the next 12 months. So very likely you're going to see 5.5 for free in a year. So if you're going to save $150 a month over 10 months is $1,500. So you spent 9 grand to save 1,500 because now if you would have had 7% for free, you could have saved $7,500. You wasted $7,500. So they're making you waste money by buying these rates down and thinking that they're giving you the best deal in the world. They're ripping you off.
Alex, on your example, they're basically saying you're going to need 4 years going out that the rates are not going to drop to 5.5 to justify what you're doing, because that's $1,800 a year you're saving by being at 5.5. But if they drop
Five years.
anywhere
It's
in
5 years. 5 years.
1,800 times
5 is 9 grand. Yeah.
Yeah,
5 years. That's your
it's a
break-even
lengthy
point.
amount of time.
Yeah.
You could take it another direction too, which is, and I did this buying a car. I'll get that in another video. You ask them, how much of a discount you're going to give me on the house if I let you charge me 11% on the mortgage? Flip it, and then you can just refinance after.
Right.
Now you got the low price of the house.
Should do another video on the cars, because as a mortgage guy, the last car I bought, I told them, I said, do not shop my credit all over the place. And I went into, car dealership A, and they did it. The next one I came in pre-approved from Capital One, and they did the whole thing that Alex said. They're looking at their finance guy and they were starting to go down that road. I handed them my pre-approval and they came back and gave me a better rate with Capital One, but they didn't shotgun my credit.
Yeah, I've got a really good story that I'll share. I'll wait for that video, But
So
that's a good one.
Yeah, the moral of the story is, I mean, people can be steered, like's been said earlier on this conversation, into something that maybe isn't the best thing for you as the individual. I mean, is that really a fiduciary responsibility to steer you into something that's 26 grand more at an interest rate of 1.5 less, just so they can move that house and maintain a higher value in the neighborhood with a recent sale of being you, the individual? Does that make sense?
Yeah.
Builders will not will sell a home at a loss. Trust me. Okay. They won't.
Right.
So there's hidden costs there. And unfortunately, they're freaking they're screwing themselves, in my opinion, okay, by not playing it right.
They have so much profit that they can give $40,000 on a transaction away and make a customer feel like they're getting a great deal. That's how much money profits in here, and they're using that profits now just to maintain their ability to sell a house.
A builder will rather file bankruptcy, forfeit the property, because all these loans that they get, their warehouse line is a non-recourse loan. They're not personally liable. Then take a loss and pay their employees, the marketing company, to be marketing as hard as they're doing. So that's all I got to tell you. You know what I mean? If it's too good to be true, it is guaranteed.
Yep.
Yes, absolutely. I totally agree.
Even the materials they're using, they're finding ways to go cheap on this. That's 3 videos right there that we could do on that.
When they're saying they're giving you 17 grand in upgrades, they're paying 5 for that. They're not giving you 17 grand.
It's already included in the price you're paying. They're giving you something that you've already paid for.
Yep.
Right. Eric, you know what? This is a phenomenal video that we can do in the coming coming weeks. If you want to buy a brand new house, some people have no choice, but they want everything new. Okay, that's fine. That's your taste. If that's the case, then why don't you save yourself about 30% or more than buying a spec home by buying a lot in construction and doing it yourself with a private builder? That's called an all-in-one construction loan or
one-time
$1 or
close.
whatever.
One-time close. We could do a whole
One-time
nother
close,
video
yeah.
on that. Yeah.
Yeah, exactly. Because you know what, I got a perfect example. But they can get the builder can get 100% financing. We do those for the developer, all right? But the way they get 100% developer is the after repair or after completed value has got to be a 7% loan to value. Okay, so that these spec builders are making way more than 30%. Right, so you can save 30% market value, appraised value, by you having a private builder and buying the lot and doing have the builder do the construction, and this acquisition and construction loan turns into a permanent loan once the property is finished. That way you're saving yourself a crap load of money.
Yeah, you can do that, absolutely. And the other way is buy a home that has the right layout and everything you like, the right piece of property, and maybe in need of a little work. You just get the 203K rehab loan and you can make it exactly what you want.
Eric, they don't have to do a 203K loan. They can do a USDA loan, a VA loan, FHA loan, conventional. No, FHA is 203K conventional loan, where they can buy the property and they can get a renovation loan. And then after the renovation is done, the whole freaking thing gets refi. So, there's a lot of products out there. Okay. So,
yeah.
Absolutely.
Yeah. So,
I was on the other end, folks, just so you know. I used to be a big-time real estate developer. I had about 3,000 residential units, 7 apartment complexes, about 1,000 freestanding properties. So I know a little bit about real estate. Okay? Plus, I have a $100 million education. That's how much I lost.
Well, I think we've really addressed this topic, and we've got some others that we're gonna, like Gus said, we're doing a part 2 to this with some others that have been in that industry that can chime in and give us their other side, their perspective. We've got the car video we're gonna do quite a few of these. So
one-time construction loans, how we can help.
Yeah, all of that. Yep. And
whatever questions you guys have, you guys don't want to speak up right now, then put it on the comments. Every comment will get addressed. All right.
Yeah.
Because this is not about, it's not about getting business. No, we got to speak out for this thing. You know what I mean? We have to let these people know. It crushes me for me to think about my parents having 2 jobs, working minimum wage, okay, so they can buy their home and educate their kids, and them getting screwed, all right, by 30-40% over market because of greedy freaking builders. They got to play ball, okay, and enough is enough here. So a little voice is better than no voice. I might run for Congress. What the hell, right? So.
All right. All right. Well, thank you for that, Gus. So I appreciate everyone joining us today. You can find Gus, Alex, and Dale at the GustinShow.com. I'm linking down below in the description to their website, where you can find them there. And look for the follow-up video, either be on this channel or the Gustin Show channel. So follow both channels. I'll put a link to the Gustin Show channel as well in the description. So.
Well,
thanks again, everyone.
They can contact you too. So give them your contact information.
Oh yeah, it'll be down below,
I mean?
Gus.
So we work as a team, So
yeah, absolutely, it'll be down below. Appreciate that, Gus. So again, thanks everyone. I hope you all have a good night, and we will catch you next week on the next video.
See you next week. Bye.